Okay, I was still muted on YouTube. I'm sorry. Yes, the earlier one was recorded, Marco. I was the people in Discord could hear me, but I was muted on YouTube. I jalapies. We gonna get into this early because going to celebrate my great niece. Going to celebrate my great niece, Marco. It's called the lunchtime lesson. That's what the name of it is. Lunchtime lesson. That's the video from earlier today. Lunchtime lesson. And but like I was saying, we're going to celebrate my great niece this evening because she was student of the month. Ain't nobody told me nothing. Ain't nobody told me she was student of the month. I just happened to find out today that she was student of the month. They tell your mama ain't nothing. Ain't nobody worrying about your mama. Y'all hold on for a second. Y'all hold on for a second. Hold on for a second. I gotta mute. Let me mute this. I gotta mute that. All right. Everybody hear me? Yes. Check, 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 check. Everybody. Okay. All right. Good evening, good evening, good evening, everybody. I jolly for that. You know, real life be lifing, man. Real life be lifing. But look here. This is your first time tuning in to Tim's Tidbit, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbit, I still want to say welcome. But I want to give you a nice heart. Well, thank you for always tuning in to Tim's Tidbits. If by some slither of my imagination you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spot if you don't hablo Espanol. And you are in tune to another episode of the Intra-Day Price Action Recap. Hip hip. Now, we get into it. We started a little early today, a lot early today, like 30 minutes early. Because, like I say, we're going to be hanging out celebrating my great niece for being student of the month at her school. Student of the month for a senior. She's the big senior class of 2025. Her and Timothy, they both seniors class of 2025. So, yeah, so we're going to be celebrating her. Uncle Timmy found out that she did a great accomplishment. Nobody had told me she had done this. Hey, where my fancy dance ain't working? I hit the wrong thing. Nobody had told me she had did this great accomplishment. And then my sister said something about it today when we was on our family FaceTime call. I say, whoa, why ain't nobody tell me about this? Hold on, now hold your phone. So that's what we gonna be doing. So let's go ahead and get to it, man. Let's get it started. Let's get it started in here. Over here is where we started the day off. That is the 6 o'clock candle. Hold up. I gotta check something in the Discord. Hello.
Hello.
Y'all hold on for a second. Who said something about feeding your mama? That's what I wanna know. All right, y'all, I'm back. Stop saying, I want my mama to come. I want my mama to come. Hey, so, oh yeah, I gotta check something in the Discord. I had posted something in the Discord, and I asked if anybody didn't know what Sixth Sister is. Okay, the G is silent. Say what Sixth Sister, so they don't know. Sixth Sister is when you have financial assets that are normally correlated with each other. They should move together like sisters. A sixth sister is when you have one of the assets which is not exhibiting as much strength as the others. Yeah, that's pretty much what it is. The sixth sister. Yep. So just like Jim Big Bird so eloquently stated, the G is silent there. The sixth sister is, if you recall, we have been talking about NASDAQ being the sixth sister, right? And when you have an asset that is the sixth sister, you're anticipating it to deliver to the same area. Let's just go to monthly charts. Well, let's come over here to the YM. Go to monthly charts, and then we can put our comparisons together. We have the NASDAQ on top. I mean, the YM on top, the ES in the middle, and the NASDAQ on the bottom, right? And if you look at this monthly chart, right? If you look at this monthly chart, right, you can see that this is the NASDAQ down here on the bottom, right? And if we look here, you'll see that this is the highest high on the NASDAQ ever, right? So this is the, right, that's the highest high on the NASDAQ right there, right? Let's get it right on the high. Yes? We going to dinner? Say what? Are we going to dinner? Yes. Why, what's up? Huh? Why, what's up? Oh yeah, we going to dinner to celebrate Sim getting student of the month. Why you what? I mean you. I mean you just ate a bowl of cereal, so I know you're gonna eat again when we go. I mean your regular routine is to eat and then eat again, and so you know it ain't make when I heard you eating the cereal, it ain't make me no difference. I know you're just gonna eat again later when we go. Well, all right. Well, we ain't leaving till 7. And plus, your mama ain't here yet. Oh, she here? Oh, okay. Well, hey, baby. Yeah, we leaving at 7. Well, you don't tell me nothing, so I return the favor. How about that? So, and you see the YM had been constantly making, so right here, right, that counter there was the all-time high for that. That was the all-time high, the same relative all-time high. And then in that same area there, right, that was the all-time high on the YM. So if we look back over, these are monthly candles, right? So in September, the ES made a new all-time high. In August, the Dow made a new all-time high and then continued making all-time highs, you know what I'm saying, up until today, right? Continued to make all-time highs up until today. But if you look at the NQ, what we primarily watch, right, back here in September, right? Back here in September, after the Dow made a new all-time high in August and the ES made a new all-time high in September, at this point in time right here, right, we said that September was the sixth sister and we were anticipating a retracement and then a delivery up into all-time new highs, right? Now, is there anybody in the chat or anybody in the gang that don't remember us talking about that. If you remember us saying that, you know what I'm saying, put a 1 in the chat or say, yeah, I remember that. You know, it's clear. I'm tracking. Right? So when we talked about it, matter of fact, how you don't know that what the Sixth Sister is when we've been talking about the Sixth Sister all this time? You ain't been paying attention in class. Matter of fact, let me go full screen on this right here. Everybody else move to the side. Move to the side. I'm talking to the GS Island. Come here. Come here. How you don't know what the Sixth Sister is when we've been talking about Sixth Sister ever since September for the NASDAQ being the Sixth Sister? We said the overall market is bullish. The NASDAQ has not made all-time new highs yet. We're expecting a retracement, and then we're expecting the NASDAQ to make all-time new highs. How you don't remember that? That's what I'm trying to figure out. That's what I'm trying to figure out. Uh-oh. I done hit the wrong thing. That's what I'm trying to figure out. So that's what the Sixth Sister is. When we got 3 correlated assets, like Jim Big Bird said, they typically should be doing the same thing. They're correlated. They should be trading in the same direction. Back in August, when the Dow made all-time new highs, we would have expected the ES and the NQ to make all-time new highs, but it didn't. And then in September, when the Dow made all-time new highs again, and the ES made all-time new highs, the NQ still hadn't made all-time new highs, right? And then the ES and the Dow made all-time new highs again in October, and the NQ still had not made all-time new highs. And then now finally here in November, it has come to fruition that the Sixth Sister has made all-time new highs, right? Well, Tim, we had to wait so long, but we've been trading it down and up. We've been trading it down. When we anticipated a pullback, we were selling. When we anticipate a rally, we was buying. We've been trading it down and up. Hey, y'all can't see me. Why y'all ain't tell me y'all couldn't see me on the screen? Anyway, so Sixth Sister. That's Sixth Sister. Anybody who still don't understand what Sixth Sister is, go find it on ICT page. He talks about the Sixth Sister. Okay? Okay. Now, let's get to it. Let's get to it. Let's put it on 15 minute candles. Right? Let's put it on 15 minute candles. And we want to run through this relatively quick because we did a nice lunchtime lesson where we did a deep dive into like some price action stuff. It was piggybacking off of the live stream that we did yesterday, and what we talked about in that live stream yesterday played out again today. To my surprise, it shocked me. How can this happen? There's no algorithm controlling price. How can this stuff happen over and over and over and over and over again? It just shocked me to my core that it happened again. But it was tied to that, so I jumped on, did a lunchtime lesson, check that out. But let's see what price did. We opened up here at 6 p.m. at 20,923.50. Right? We pulled back, taking out this low here, took out a short-term low there, time-based liquidity, right? For those who can't see it, it would be that low right there, right? We took out that low, that's time-based liquidity right there, right? And then we came up, right? We came up, right? Let's look at this a little closer, like this right here. When we came into the day and dropped down and took out this liquidity down here, right? Let's We sprinting now. So we want to pay attention to the signatures as they're going. People say, Tim, I can't see this stuff as it's forming. So I talk about the same thing over and over and over. Right? So we open here, drop down, took out time-based liquidity. Right? We took out time-based liquidity. That is a low that was created in the New York afternoon session. Right? We come down. So now that's time-based liquidity. We're in a new session and we're taking out a low from a prior session. Whoop! Took it out. On the way down to that low, right, we created a bearish fair value gap right here. Right? Where is that bearish fair value gap located at? Right? Somebody tell me where this bearish fair value gap is located at in the scope of this new session that we've started. Right? This is where we started the session in the discount. Very good. This is where we started the session. Right? We started price here. We came down there. We took out sell side here. And we created a bearish fair value gap in the discount of the range. Right? In the discount of the range. Now, a quick side note for anybody who don't know about the Timonucci's, right? This right here is a Fibonacci tool, right? If you don't know about the Timonucci's, right? If you ever see price moving, right? And we start to see how we starting to consolidate right here, right? See how we starting to consolidate there? Let's do this right here for a second. Let's turn on market replay and let's go right there, right? And you see how we got these two candles overlapping with each other right there, right? On this time frame and a lower time frame, this is like a small consolidation because this is 30 minutes. That's 30 minutes, right? Let's look at that on a 1 minute time frame, right? So if we go to a 1 minute chart, right? We go to a 1 minute chart, right? You see what I'm saying? We're consolidating right here. Right? We're consolidating right there. So if you don't know about Timonucci tools, right? If you get a Fibonacci, right, and anchor it to the highest high, right, and you pull that Fibonacci down until the Fibonacci 50, you pull the Fibonacci until the 50% line is over there where it's consolidating it, right? Now you shout out Rice in a Bowl. What's going on, Rice in a Bowl? Y'all don't know who Rice in a Bowl is. Rice in a Bowl is fam from the other community that y'all found me in. Y'all was out there looking for me, and y'all found me in my private community where I was minding my business. Rice in the Bowl is from the community over there. You feel me? Y'all welcome Rice in the Bowl to the gang, right? So, back to the Timonucci's, right? If you get the Fibonacci tool, right, and you extend it down and just put the 50% right there where it's consolidating at, I call that a Timonucci because we know that price typically consolidates at equilibrium, right? And since price consolidates at equilibrium, then you put the Fibonacci at equilibrium. And then wherever you pull it to, and there's no price down there, that is a realistic spot where you can expect this price range to move to. Why? Because it consolidates at 50%. And if you know, okay, it typically consolidates at 50%. If I go to the highest high and I pull the Fibonacci down and put it on the 50%, I can expect price to go there. That's why I call it a Timonucci. Because one day me and the gang was on, we was like, hey, let's do an experiment. It's consolidating here. Let's stretch this up, put the Fibonacci tool there on the 50% and see if price goes to that point. And ever since then, that's why I call it the Timonucci when we're projecting it out, right? So now, let's put the meat back on the bone, right? And let's go back over here where we stretched out the Timonucci at. And voila! Look at there. Right? It ain't going to give you exact, but look where it came to. Right down there. That's what we stretched it to. And look where price came to. It came down to that area there. right? But ooh, look at this right here. Look at this. Let's move this over. Let's move this over right here. We're just gonna shift that over. Let me see if that calibrated eye. How that calibrated eye doing? Look at that. Boop, 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 boop. Let's go that first red candle down there. Oh my goodness. Boy, that calibrated eye working good. But look at that. That first down candle that dropped down there below that low. Right to the tick, baby. Stop playing with the Timinucci tool. All right. That's enough on the Timinucci tool. Now let's get back to what we was talking about. Price came down. It took out time-based liquidity, right? Created a bearish fair value gap in the discount of the move, right? Anytime you get a bearish fair value gap in the discount of the move and you just swept an important liquidity level, what are we expecting this SIBI to become? What are we expecting to happen to that SIBI? Right? Done. Unmute and tell me what we expecting to happen to that SIBI. You done been here long enough, Dunn. I know you a new little baby bird in the nest, right? I know you're a new little baby bird in the nest, but you done been here long enough for me to pick on you. Unmute and tell me what we expecting. Y'all stop cheating and putting it in the chat. Dunn trying to ignore me right now. That's okay, Dunn ignoring me. Very good. We expecting that to become an inversion. Right? We expecting it to become an inversion because it's in the discount and we've just swept time-based liquidity. And then now we're going back up. And then on this candle right here, right, we create that inversion fair value gap. And we also give us our change in the state of delivery right there. Right? Y'all see that? Change the state delivery. This is our order block there. We create a bullish fair value gap here on the 830 candle. On the 830 candle, we create a bullish fair value gap. We trade back down into that bullish fair value gap, back down. Bodies of the candles are totally respecting that 15-minute change in the state of delivery. Let me mark that out. And oh, come on. Let me mark that out in case somebody don't understand what I'm saying. Right? So it's bodies of the candles totally respecting that 15-minute change in the state of delivery. Right? And then we rally up, come up here into this rejection block. Don't poke through that high, pull back down into the order block. Then we rally up again, taking out the high. Okay? Took out the high there. Now let's do this right here. Right. Now we got that low, left it alone, did not take it. All right. Then we rally up, come back down, do not take that low. We rally up, come back down, do not take that low. Right. We kind of consolidate. We dip down below this low. Right. Because like I say, remember what I told you. You can take out short-term lows in a buy program. Right? You can take out short-term lows in the buy program like this low right here. See how we took out that short-term low right there? Right? And we didn't take that low. Then you come over here. See how we took out that short-term low right there, but we didn't take that low. Then we come over here. Price came down, took out that short-term low right there, right? But we didn't take that low, right? Because when we expecting price when we're expecting bullish price moves, right? What do we want to see prior to looking for our entry, right? When we're expecting a bullish price move, what do we want to see prior to looking for our entry? Jim Big Bird. Unmute, tell me, what are we looking for prior to looking for our entry when we're expecting a bullish move? Before looking for our entry, what do we want to see happen first? Jim Big Bird, speak to me. Yeah. I just see Deborah Jim, are you talking? I see you unmuting. Are you talking, Jim? Jim on the iPhone 1, y'all. Vernon, help Jim out. Vernon, what we looking for before we look for our entry?
Can you hear me?
I hear you.
Oh, we want some liquidity to the sell side taken.
Yes, there you go. We want to take liquidity on the sell side before we start looking for our entries. And then you see how every time, like this buy program is strong. But you see, even back here, right? Even back here, right? We took sell side, right? And then we set up an entry right there. Took sell side, displaced up. We got to change the state delivery there. Inversion fair value gap, bullish fair value gap, retrace, entry, right? We rallied up over here. Price ran off on the plug twice, right? Price ran off on the plug twice, right? Here's your lowest low over there, right? That's your lowest low there. Price then took off, ran off on the plug twice. It retraced back down, right? But if you look right up here, right, it traded below a low right there. It traded below a low right there. So guess what? It took out sell side liquidity, right? And then we blast off, giving a trading opportunity. Well, Tim, I don't see a trading opportunity there. What are you talking about? We got a new day opening gap right there. See that gray spot right there? It's only 1 point. It's only 1 point, but there's a new day opening gap right there, right? New day opening gap right there, right? We come down below that low. Now, in this case right here, I ain't gonna hold you. You probably got your head bust if you was trying to trade right there. And why is that? Because, let's go. Y'all know the most important thing for the algorithm is time, right? The most important thing for the algorithm is time, right? So, this right here is starting off the London Open. This is the London Open here, right? So as we came up here and came back down, right? As we came back down, right there at that volume imbalance, at that new day opening gap, right? What happened right here? The London session, right? Swept out, right? The London session swept out the sell side that was created during the opening range, right? This is the London Open. That's the lowest low from the London Open, right? This is the highest high from the London Open, right? This right here is the first 30 minutes, right, of the London session. So this is your opening range for the London session right there. If you come all the way over to there, right, this is the first hour, right? That's the first hour of the London. And then what do we expect if we're coming into a new anything, right? So this candle here is the start of what? This is the start of a new what? Somebody tell me, right?
Price range?
No,
Range?
no, this is 3 o'clock start.
Session.
And this is the end of the hour. This is the start of the session here. And this is the end of the 3 o'clock hour. So this candle starts a new what?
I'm gonna give me the answer.
You go from 3 o'clock, then 4 o'clock. So this is a new what?
Hour?
New hour, right? And when we're moving into a new anything, right? When we're moving into a new anything, we anticipate what? Some kind of manipulation, correct?
Okay.
So we're anticipating manipulation because time is of the essence. So here we start the new session, right? We create a low and a high, right? What do we do when we start a new anything, new hour, new session, new anything, right? We look at the opening range, right? We set us a new high. We set a low. This is the lowest low. That's the highest high of that new session, that new hour. So we go into this second hour, right? So what do we do when we let price establish a range, right? We let price set a high and set a low. What now? What are we looking? What are we waiting for now?
A price to tell you where it want to go.
But
Or show
what?
you
But
where it want to go.
yeah, show you where it want to go. But what are we
Oh, you
waiting for
want
it to
to
do?
attack one of them sides.
Attack one of the sides, right? You want price to take one of the sides. And in this case, we're bullish, right? We bullish in this case, right? But so we want it to attack the sell side first because we want to see it attack the opposing liquidity, right? So we come down and we attack the sell side. That's why I say if you was trying to trade off of this new day opening gap, you probably got your head bust because you wasn't aware that we starting a new session, right? So you want to let the price set itself up in that new session. Now that it established a high and a low, right? Now you're waiting for price to attack one. Since you're bullish, you want it to attack the sell side. We take the sell side, got a nice rejection off it right there. So now it's letting you know I have done my liquidity sweep right there. Now, when you come back, right, remember, we can cut through candles. PD arrays don't get stale. Remember when we talked about this price run here, when we came down, took that sell side, left that sell side, pushed back up and traded back down. And we said, well, Tim, I don't see a trading opportunity in there. Remember, right? We had us a volume imbalance right here. That looks familiar. Hey, if you look to the right of the screen, look how price is respecting it. We had us a order block right over here, right? If you look over there across the screen, hey, look how price is respecting the mean threshold. You see those little dotted lines right there? Those two dotted lines. One of those dotted lines is the mean threshold of the order block, and one of those dotted lines is the consequent encroachment of the volume imbalance. But look at the bodies of these candles respecting these PD arrays that price set on when it swept liquidity over here and then displaced away. Look at how it's respecting this stuff, right? It's respecting it even here. It was respecting it here because look at the bodies of the candles. This wick down below that low was just giving the time-based aspect of price, which is coming into the London session, an opportunity for smart money to buy below a low. And at the same time, it's keeping the buy program intact because it's not taking out this low, right? So we're leaving the important lows alone. Excuse me, we're taking out short-term lows. And as we continue up throughout the rest of the day, right? Once we do that, price expands up, comes back down, leaves that low intact. Remember that low? That was the low from London when we took out that liquidity right there. Left that low alone, right? Price expanded away, pulled back down into the imbalance. Well, they didn't even make it to the imbalance. They pulled down into this mitigation block. You got a mitigation block here. You got a mitigation block. Well, actually, if you like to look for your PD arrays in the junk right there, this would technically be a breaker because you got a high, a lower low, and a high. But I don't like look for mine in the congestion like that. I just say it came back down to a, what is this, y'all? What is that right there? Somebody tell me what that is, what I just put that square around.
Is that a balanced price range?
Balanced price range. Very good. Right? We came back down and we're using that balanced price range as support. When we create a balanced price range, we're anticipating it to either be support, resistance, or cut through it like butter. And in this case, we're bullish, so we're looking for it to be support, 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 support. Right there. Right? So this right here, right, was giving you a clue that the balanced price range was acting as support when the price was showing an unwillingness to even come back down into the imbalance down here, right? It couldn't even get back down into the imbalance, right? Showing extreme bullishness, okay? So we trade down there. This is at 8:30, right? Tap the balanced price range, and then they off to see the wizard, the wonderful Wizard of Oz, right? Nothing can stop me. I'm all the way up, right? Pushing, 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 right? So now that it pushed all the way up, let's come over here. Let's move this over. Let's move this over now to the 930. All right, that's our 930 open right there. So going into our 930 open, right? At our 930 open, we're pushing, right? Consolidate, pushing. We're just in melt up mode right now, right? If you ain't in now, you ain't getting a chance, right? You ain't getting a chance. You gotta get down to a lower time frame and look for something. Cause right now it ain't giving you a chance, right? Nothing giving you a chance. Now, let's go over here and we're gonna go to 10 o'clock and we're gonna do a quick recap of what we talked about earlier for those who missed it, right? Put our 10 o'clock line there. We're gonna go down to a 1 minute time frame, right? Go to a 1 minute time frame. Go over here to the 10 o'clock spot right there. All right, so 10 o'clock here, we come into 10 o'clock, okay? All right, and 10 o'clock here, we got a high there. Come over here. We got a low there. All right. So now we got a high, we got a low. All right, we got a high, we got a low. Remember what we talked about just a little bit earlier? What was we saying earlier? We came into this 10 o'clock hour. Came into the 10 o'clock hour. The algorithm set a low, right? We came down, made a low, pushed up, right? Came over here, we made a high, right? Pushed down, and then we started to consolidate right there, right? We started consolidating right there, right? So since we already set a low and set a high and then start consolidating, now you're not going to use the Timinucci's, you're just going to use the Fibonacci because price already gave you the low and it already gave you the high. So it's consolidating here. So now you say, okay, this is my range, right? This is the sell side liquidity. I want to see swept because I'm bullish, right? What did price do right here? It swept the sell side liquidity, right? Once it swept the sell side liquidity, didn't displace below it, right? It also traded down into a discount PD array, right? How far below the sell side can you go? Hey, there's a discount PD array sitting right there on top of a balanced price range. Yep. So I want to see how price reacts there. Okay, we trade down into the discount PD array. Let's make that green because it's messing with my eyeballs because it's bullish, right? Trade down to consequent encroachment, close right near the low, trade down to the low of the discount PD array, right? Close back above the swing low, trade down above consequent encroachment, respecting consequent encroachment of the deepest wick, right? Consequent encroachment on that wick is 20,890.50. The low of this candle right here is 20,889.75. So 20,089.50. 21,089.50. The low of this candle is 21,089.75. One tick away from consequent encroachment of that. We displace up, right? If you look over here, oh, does this look familiar? On the way down, right? On the way down to take this liquidity, price created a bearish fair value gap. Where was that fair value gap created at? It was created in the discount of the range. How do we know that? Because price set a low, price set a high, then it started consolidating right there. We ran the Fibonacci from the lowest low to the highest high, saw that was equilibrium. Price came down, created a bearish fair value gap in the discount. We're anticipating this to become an inversion fair value gap, right? We're anticipating that to be an inversion fair value gap. Price displace away on this 1036 candle, right? Giving us a break in market structure because that high took out that low. So we trade above that, giving us a bullish break in market structure there. We created an inversion fair value gap as we anticipated. We created a bullish fair value gap, right? Where is this bullish fair value gap created, right? Let's find out. How are we going to find out? We're going to come to the lowest low, to the highest high of this price leg right there, this new dealing range, because we took liquidity there. We took liquidity there. This is our new dealing range. This bullish fair value gap was created in the discount of the move. Oh, this got to be sounding, y'all got to be going through deja vu. The bullish fair value gap was created in the discount of the move. Price traded back down after taking the buy side, getting a bullish break in market structure, creating a change in the state of delivery, trade down into the discount PD array, leave the low alone, do not take the low, right? And then we displace away. Nothing can stop me. I'm all the way up. Now, you say, Tim, I'm not trading that. That's too. It's okay. Because guess what? Price, as it displaced away, right? As it displaced away, all thing we did was do the same thing again. Right? And this in reference to like maybe a higher time frame, right? Let's see what this is, right? So right here, right, when we get that break in market structure and we pull back there, that's the 1040 candle, right? So we come over here, that's the 11 candle. So 1040, 1050, 1040, 1050, 11 o'clock, 11, that's 15 minutes. So that's 3 5-minute candles has passed away, right? So has passed during that time. So if we look at a 5-minute chart, right? If we look at a 5-minute chart during that time, on the 5-minute chart, all we did was create a bullish fair value gap, right? We came down here, took out liquidity, displaced up, retraced back into a bullish fair value gap, and then went up. There's a 5-minute entry right there. Price is fractal, people. Price is fractal. Y'all should be having deja vu, because this same thing that we talked about on the 10 o'clock lunchtime lesson that we did was the same thing we talked about when we was going through the price back over here. Right? The same thing. I rest my case. I yield my time. Do anyone have anything for me? Huh? Do anybody have anything for me? Y'all see what happened the rest of the day. The Six Sister played out and we reached all-time new highs. Right? What's going on, Captain Price? You're welcome, Kashaya. Well, I guess ain't nobody got nothing. We're going to go ahead and call it, I guess. Save for my pizza trading account. Personal one for now. Your pizza trading account? Speaking of trading account, I saw a video today. Somebody said FTT done shut down, done rug pulled everybody. That company that I distanced myself away from, I say, look, man, I don't rock with them. You better stop, Rice Bowl. Rice Bowl, you better stop that. You better stop that, Rice Bowl. Hey, man, that's it. I ain't going to hold y'all up. Like I say, going to celebrate my great niece. So since y'all ain't got nothing, we're going to go ahead and call it. Hopefully y'all got something out of this price action recap today. Gang. Is it making sense? Is it clicking? Is the clicking?
It's clicking. We making sense.
All right. Lump say it's clicking, gang. Lump say the clicking is clicking. Who else? Is it clicking for anybody else? Lump say the clicking. Is it clicking for anybody else? Is it starting to make sense? Deborah said yes. Go and enjoy your time. Oh, yeah, about to do that. Appreciate that, Marco. Deborah said yes, it's clicking. The clicking is clicking. We sprinting now, man. Told y'all we sprinting. All it takes is a little bit of patience. You know what I'm saying? And remember, on days when the algorithm is just being let go, y'all, them signatures gonna be signaturing. You know what I'm saying? And when it's being constrained, you can still see the signatures, but you just got to be a little more nimble. You got Jack be nimble, Jack be quick. Get in and out. Get your money, get gone. Get your money, get gone. Because y'all see, as we've been looking through price, right? As we've been looking through price, it's been, you know what I'm saying? Price has been doing algorithmic stuff, but when it's holding it, it's just high resistance or seek and destroy. When it's not holding it, we trending, but it's still doing the same thing. And with that, I shall bid you adieu. Again, if this is your first time tuning into Tim's Tidbits, please allow me to say welcome and thank you. If it's not your first time tuning in, allow me to say, well, thank you for always tuning in. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's Big Spot if you don't hablo español. This has been another episode of the Intra-Day Price Action Recap. Hear me. Y'all enjoy y'all evening, man. I'm going to enjoy mine. Tomorrow is Friday. Let's check the economic calendar before we go. Tomorrow is Friday. We have reached our destination. Gang. What do we do when price reaches our destination? I need somebody to unmute and tell me what does price do what do we do once price reaches our destination? We got consumer sentiment tomorrow at 10. What do we do when price reach our destination? Wait for it to show us what it wants to do. We wait for it to show us what it wants to do. Why y'all ain't tell me I just had it on me? I mean on the thumbnail. We wait for it to tell us what it want to do next. We're not going to try to force anything. Tomorrow's Friday, right? If you've been profitable this week, take the day off. Take the day off. Don't trade tomorrow. If you've been profitable this week, don't force anything because we've reached our destination. So don't try to force more trades. If you've been unprofitable this week, take the day off. Don't dig the hole deeper for yourself. If you haven't done anything this week, take the day off. Don't start nothing on Friday just to possibly get your head bust. Again, we've reached our destination. If the market blasts off 300 more points or if it tank 500 points, who cares? The market will always give you another opportunity. Yeah, man. And with that, y'all enjoy y'all evening, man. Again, I already told you my name. I already said whatever. Share it with a friend. Tell a friend. Tell a friend. Tell a friend to come over here and get this good information, man. We trying to build a new country together. Yeah, man. I'm gone. Y'all enjoy y'all night. Be safe out here in these trading streets. Yeah.